Hey guys, good morning. Quick Sunday morning video. Just two things I want to address, and I'll make it short and sweet. The one is we're going to look at a gold chart and kind of figure out what's happening with gold and the reason gold is moving down. Technically, I'm bullish on gold longer term, but obviously there's a reason that it's pulling back here, and it's part and parcel to the movements we see in the market. And the selling off of gold is probably a component on the market topping out here. In some aspect, it's one of the final pieces that you see in people rotating assets to kind of throw in the towel. They're selling their gold hedges to move into long equities. So, we need everybody in the market to create a top, because it's certainly not going to come from technicals. It's not going to come from riots in the news. It's not going to come from some worry about earnings currently. Those things have all been kind of factored in unless we get a huge surprise to the downside, like I said, from a major company. Completely blowing out to the downside. So a couple things to look at real quick, and I'll make it short, like I said, short and sweet. I'm doing bar charts here just for simplistic reasons on charting. But I ran from a baseline reversal extension on the Fibonacci. What I mean is when the market bottomed out on SPY, and I hate to keep coming back to SPY because SPY really isn't a good indicator of the broader market, but I'm sure the charts are probably fairly similar, whether we're looking at the S&P 500 or whether we're looking at the New York Stock Exchange, the Dow Jones Industrial Qs. Within their intrinsic patterns, they are going to be topping out or bottoming out at the same time. Obviously, they move somewhat synchronized. There are days where you have extra weakness in the Dow Jones versus strength in the Qs. We get it, but from a macro perspective, for the most part, they are moving in synchrony. What I did was I run the baseline 100% extension on a reverse. So what I'm saying is the top, we start at 0 instead of the bottom on the Fibonacci, so that we can hit baseline 100% on the first leg reversal breakout. So what I mean is when the market pulls back, we bounce, we kind of pull back, and then we close right at this level. And I wanted to use the closing level on the Fibonacci. And then, of course, we can use the bottom here. I don't really like to use bottoms, and these might be off a hair because I might not have hit that exactly. The lowest 218.26. My fib is 218.47. You get it. If you pull this down, this is going to move a hair as well. But the overall idea is to kind of figure out from this extension that we saw, have we hit a top, or can we extend into that trend line to the upper end and then fill the gap? It becomes harder to fill gaps at lower ends of breaking out, but it becomes easier to fill gaps at the higher end as more overhead supply comes in and the market stretches and becomes overbought on the daily. But gaps like this and here were never really filled, so most technicians that expect gaps to be filled probably shorted this move and have paid dearly on the way up. So we're not saying short this move, but we just need to be aware that the possibility is when we look at this extension that I did draw, that we may have actually topped out on Friday short term. We need some consolidation, we need to pull back, and could this be the one that actually pulls back and fills the gap, which would be around 313? I tend to think not, given the momentum that this market's seeing and that the weekly still has some room on the RSI. So my target price pullback would be a little shakeout below the candle of the low of Friday, and probably looking around the 315 area. That doesn't mean just go out and buy the 315 area. It just means be aware of that. And if you're looking to buy stocks long that are showing strength, that's a good area to start looking at. Or if you do come in short and the market starts to roll over, that might be an area to cover at right around the 315. Doesn't mean we can't go lower. It just means the energy transfer there will be a little bit more significant, meaning that as you stretch down and sellers pile in, the buyers are probably going to have a little bit more strength at that level, and it's like a tug of war. Eventually they'll wear out the sellers and you'll push back up higher. So that's just one thing to look at. Gold, obviously, we could look at the GLD and see that the pullback here has been significant. It's obviously a lot to do with just rotation. A couple different areas of confluence here, which is unusual, is that the political tensions have caused the dollar to roll over and pull back. But is the dollar hitting an area of support here short term across like a little bit of a triple bottom in here? We had the reversal and then we're coming into it here. A little bit of bounce on Friday, but you also have a quadruple bottom in this area. So could we go back a little bit lower? We certainly could, but And I'm not going to show all the technicals on this. I've already looked at the work on it, but the MACD shape and the velocity of the selling here would probably indicate that this is going to continue as the market strengthens or continues to move higher, not strengthens. But you know, we like I said, we could possibly have topped out short term here, and you're going to get a bounce in gold. But until the reversal trend on the market takes place, as participants threw in the towel and said, "Boy, this thing's going to go to all-time highs across the board," you can see that gold sold off after holding a little bit of an area of support. I'm sorry, looking at the dollar here, but the gold is the same thing, the area of support, and actually moved in tandem with the dollar, where usually they move somewhat inverse of each other. Usually when you have weakness in gold, you have strength in the dollar, but this has more to do with politics. This has more to do with rotation in the market. So what will happen, hopefully, is that you will see a bounce in the dollar here, and the market will continue higher. Then you could have a more significant pullback in the dollar, looking at the shape on the MACD, possibly down to the 25, 26 area on the UUP. And as the market starts to hit maybe a potential top, then gold could get a strong reversal. But gold does look, we talked about it as right at support on Friday. I don't like the what I'm looking at in the shape on gold. I think there's a little bit more weakness to go on gold. Obviously, it has more to do with the market strength. So, you know, we've broken the shorter term 20 and the 45 that I've been using, 50-day moving average as well. It doesn't mean we have to go down and test the 200-day moving average, but certainly when you look at the shape of the MACD, that's not something you like to see with that powerful move down right there that you see with the angle, and some pretty heavy selling pressure on gold. A little bit more room in the RSI before we get to what's traditionally an oversold position on gold before we see a bounce. So you can see that we've actually gone below the 25 multiple times before a nice bounce. So given the unknown on the market, whether the market's going to continue to strengthen, and given the unknown on gold, and especially since it got rejected from some higher levels here and broke some trend lines on GLD, we don't want to guess. We can play the intraday moves. We did bounce from the low and close halfway up the channel on gold on Friday, so maybe the market participants that haven't been in gold are trying to time some type of reversal in the market. We don't know whether that's going to happen or not. So since there's a little bit of a neutral position on gold, and we don't like really to play a guessing game, we always play the if this then that. So we want to be positioned if it pulls back to buy it, maybe accordingly in the 155 area on GLD because of all this congestion in here, and then this back test area we broke to the upside. So somewhere along in here is probably going to be a good area to maybe buy our JNUG if it pulls back to, other than intraday trading and then getting out by the end of the day. That way we don't get smashed when we wake up in the morning and gold is gapping down to this trend line here. Given the shape of the MACD, we could certainly see a break. As we zoom in here, we could see a break of the neutral zone before we curl up, which would probably coincide with this area somewhere along here. We could even go lower if you look at the trend line break here for the pivot to the upside, and then we kind of draw what we would call the bullish pendulum here. You can see the breakdown, the back test, the push higher, and then the back test on support, which resistance now becomes support. Maybe we make an M because we are breaking a neckline, head and shoulders here. At least on the momentum side, that's been broken. And then on the support side, we're in jeopardy of breaking that neckline as well on some level. So not really the head and shoulders that you normally see as far as traditional technical analysis, but more of an elongated head and shoulders where you can kind of see the head in this area here. If I can get my chart to behave accordingly, which it's not. There is a little bit of a head in here, and then, I'm sorry, shoulder here. The head is smaller than the shoulder here, which was short in nature given the quick move we saw in the market. This probably wanted to extend out a little further before changing direction, deciding what it wanted to do. But you get the idea. Let's step aside for now and give it some room to the downside. If it goes to the upside, we also have the opportunity to kind of short it as it tries to find some equilibrium before we can kind of guess what it's doing here. So this more likely be the target line for gold. The bounce intraday might have just been an oversold bounce because you had some pretty heavy selling, a little bit of a weak retracement, and then a continuation move. Just given the expansion and the angle and the room in the RSI, I would say don't try to step in front of gold just yet. Intraday scalping's fine. Get lucky on a trade, and we could move back up inside the candle from Thursday, not a big deal. But there is no real directional move in gold right now, and if anything I had to guess, I'd say it's a little bit lower in the short term. So two things to look at. The dollar obviously being weak will help gold out eventually, but the rotation in the market's certainly hurting gold right now, so be cautious.